Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for coming on.
Happy to be here.
Well, stocks in New York overnight closed strongly higher on signs of a recovery in manufacturing. The S&P and the Nasdaq closing at new all-time highs. What was the story in the global markets?
Okay, well, August has been a really great month for S&P and Nasdaq. They had the best August in 30 to 35 years. Dow hasn't been doing as well, but all three major stock indices either surpassed or comes very close to the level that it was during the beginning of the year. So, in a sense, they have recovered from the coronavirus shock. Dow rose 7.6% during August. It's down just 0.4% compared to beginning of 2020. That's excluding dividends. S&P rose 7% for August, and it's up 8.3% for 2020. Nasdaq went up 11%, for August, and from beginning of 2020, the value rose by a whopping 38.7%. So it's almost like for Nasdaq, coronavirus is actually good for it, and taking account of the tech-heavy nature of Nasdaq and how technology has gained value because of the lockdown and shutdown from coronavirus, that is in part understandable. But still, the price-earning ratios are historically high for the stock market as a whole. The market valuation is also near a historic high, so it's questionable whether firms deserve such high stock prices. Theoretically, stock prices represent weighted average of all future earnings, and it's doubtful that coronavirus has increased the future potential earnings this much. So the current rise seems to be depending more on short-term factors like low interest rates than any future changes in future profitability. European stocks, FTSE had largest fall in 3 months despite manufacturing rebound in the United Kingdom. Other European markets fell yesterday and Monday, but it seems to be recovering somewhat today. Asian markets, Chinese markets have been falling, but the Nikkei, Japanese market, seems to be doing well, and that's probably because the market fell on Friday due to Prime Minister Abe's announcement that he was stepping down. But the gain seems to be because, well, the transition process to a new prime minister seems to be going well. For Korean markets, KOSPI, it's rising on Tuesday and today. Nasdaq, it's been rising all week. The KOSPI is up 7.6% for the entire year. Nasdaq is all up whopping 29.4% since the beginning of the year. So at least for the Korean stock markets, KOSPI and Nasdaq seems to be over coronavirus like the U.S. stocks.
It's an amazing thing to see. Well, speaking of South Korea, and its government budget for next year is around 555 trillion won, which is, of course, a record. We're getting close to $500 billion now. What do you make of this spending plan for 2021?
Okay, well, if you look at the details, then there are large increases in R&D category, industries, small, medium-sized enterprises, and energy category. That's because of the Moon administration's Korea New Deal plans that are coming into effect. The largest component of budget for next year is health, welfare, and employment. That's 199.9 trillion won. That's 36% of the budget. And of that, the employment component is the largest component at 30.6 trillion won. And not only is this component large, its increase is also very high. It's gone up 10.7% compared to last year. If you just look at the employment component, it went up 20%. But there was a lot of criticism about some of these programs before the coronavirus. Most of it was used for 20-year-old subsidy for young people getting jobs. Also, a lot of temporary jobs for older retirees being created. Those were thought of as not being very good quality jobs. once the government program is over, those jobs will disappear. So we really need to evaluate the effectiveness of these programs. And then another factor that is somewhat worrying is that the second largest component of the budget is general and regional administration, and it has two subcomponents. One is assistance to regional governments. That fell. But there's the other component, which includes general administration as well as central government and regional government employees. And that has really risen a great deal. It's 34.8 trillion won, and it rose by whopping 29.7%. Now, there has been concerns about this before, but if the government uses new government employees to prop up the unemployment numbers, that it may be good for short-term unemployment figures, but in the long term, it creates just so much burden for the government budget in the future, and the increase in the government's debt to GDP ratio is going up quite quickly under the Moon administration, not only in this year's and next year's budget, but for their budget projections up to 2024 as well, that it is really concerning. We need more spending to combat coronavirus, but we also need to make sure that the money is being used effectively.
All right, Professor Yang, we'll have to leave it there for today. Just run out of time. Thanks so much for coming on today. Appreciate it.
Thank you.